Australia has only recently regained the title of the world's largest exporter of beef. Brazil and America have been title holders, but there's a new and very unlikely challenger on the horizon, and that's India. According to the US Department of Agriculture, price-sensitive customers in Asia, the Middle East and Africa will push demand for buffalo meat way above its current level of more than 1 million tonnes a year. In round figures, Australia and Brazil lead the exports at present with just under 1.4 million tonnes. India's number is 1.28 million tonnes, and America's exports currently total about 1.25 million tonnes. Buffalo meat has several advantages. It's naturally lean, virtually all is organic, and it's all halal slaughtered. And crucially, it has a price advantage over regular beef of 200 to 300%. MLA marketing veteran Peter Barnard recognises the issue but says Australian producers are well placed to meet this competition.
It's certainly something worth watching, but just as Indian exports have increased into the Middle East and Southeast Asian markets over a number of years, so have Australian exports. Into the Middle East last year we did 32,000 tonnes. That's up from 4,000 tonnes 5 years ago, so a major increase in Australian beef exports to the Middle East. And similarly to Southeast Asia, our exports have doubled over the last 5 years. So just as Indian exports have grown into particular segments in those markets, so have Australian beef exports.
That's Peter Barnard from MLA. Moving on to cattle prices, and restockers continue to dominate sale yards with very strong demand, especially for females. Supplies were inconsistent during the March quarter because of the widespread floods, but there's no doubt the big wet was an overall positive with lots of feed and very good quality cattle available. Prices last week were mostly positive. That trade cattle figure seems to yo-yo like that week in and week out. The weather and the dip in our dollar has given some impetus to a rising air of confidence in the beef industry. Now, the next few months will tell the story. Traditionally, it's a strong turn-off period and all that grass will no doubt eventually dry off. And there's another factor to consider, perhaps longer term. Beef Central newsletter is reporting that an American beef boss is claiming their meat exports to Japan next year will lift by 24%. That's about 30,000 tonnes, and that can only happen at the expense of Australian exporters. But for the moment, the restocker demand has pushed our Eastern Young Cattle Indicator to $3.90 a kilo. Now, the shorter weeks saw lamb and sheep throughput drop, and there's also a flock build-up factor in WA and in the east. Prices are okay, but heavily down on 12 months ago. Here's the comparison. Lamb's down more than 26%, and mutton is off well over 30% since this week of last year. Now, the live trade out of the north is extremely busy, with some ship breakdowns causing problems. Steers out of Darwin are $1.85 and heifers are selling for $1.70. There's a Townsville quote too of around 10 cents less. To grains now, where the sentiment is very positive on the back of bullish outside influences, strong equities, a high crude price and a weakening American dollar. Chicago was also helped by excellent American exports of corn, wheat and soybeans. China's demand for soybeans appears insatiable. In the first 3 months of this year, China has imported more than 13 million tonnes of soybeans, most of this from America. Now, local futures are soft as the Aussie dollar goes through yet another round of firming up. I'm told planting is already underway in the north, while in the south there's a lot of canola being scheduled, and it's worth noting that Canadian canola planting this year will be an all-time high. So here's the futures for January. WA wheat remains with its usual premium. New crop prices have just been released by GrainCorp. Traders will be watching those prices very closely. Australia's wheat exports are booming at present. In fact, February tonnage is reported as an all-time high. And a final note on wheat. The accounting firm Ferry Hodgson is looking for wheat growers who lost money way back in the late 80s by selling wheat through AWB pools to Iraq. Iraq didn't pay then, but now apparently they've coughed up. Ferry Hodgson says as much as $50 million could be involved. There's an excellent page on their website which explains how you can make a claim. Just Google Ferry Hodgson and away you go, and good luck. Now, cotton and sugar in New York. Cotton bounced, but analysts remain wary about this price. While sugar is steady, it continues to trade within that price range of 23 to 25 cents a pound. Wool brokers had the week off, but I did find some interesting statistics about where our wool is sold. It's no surprise that China takes the bulk, and there's a massive gap to the rest, headed by India and then Italy, the Czech Republic and Taiwan. Wool sales will resume this coming week when a massive 56,000 bales will well and truly test that market. That's it for the prices, but stand by. We're about to hear from one of the most influential figures in the wool game.